valuation aside, is the price right for Facebook shares? Corey, stay with me. I'm also going to bring in our Bloomberg contributing editor, Paul Kudrowski in New York, and Michael Pachter, an analyst at Wedbush Securities in LA. Michael, let's start with you. You've got a target price on Facebook, $44 a share. What is your take on the price today, though? $38 a piece. Is that going to avoid the sort of pop and drop fear tomorrow?
You know, I think adding the 50 million shares yesterday is probably what kept the price down to 38 because they obviously soaked up a lot of that last-minute demand. I still think you get a pop because there aren't very many retail investors that are going to get any shares in this deal. And this is the kind of stock, you know, you have 900 million users, so I have to believe that there are tens of millions of people who would like to own 100 shares of Facebook. And I expect you're going to see a lot of demand for the stock at the open.
Paul, what do you think demand is going to look like tomorrow? Who's going to end up with shares in their hands?
Mostly people who wish they hadn't, probably, because, you know, the only way you're going to get shares in your hands tomorrow, at least initially, is some kind of open market order, which would be truly deranged given what's likely to happen on the open on this thing as it spikes higher and then probably trades off through the day. So, you know, other than the people who bought pre-IPO who are delighted with the $38 price, because as you said, other than the folks who came in at 45, most of the recent history of trading in the secondary markets in Facebook stock has been at much lower levels. So the folks that I'm most worried about, quite honestly, and they always take it right on the chin, will be the retail investors who make the huge mistake of buying in the first 2 hours.
And yet, Corey, a lot of people seem to agree there's a lot of upside priced into this already. How much?
Well, I mean, you know, to Michael's point, so Michael's got this $44 price target on it. My friend Michael Pachter, he's a terrific analyst. But it's a guess. It's a guess at what the PE ratio is going to be. You know, that's based on a 2015 earnings number, I think, of $2 a share, which is a guess on what their EBITDA margins are going to be. And you can figure all those things out within a fair way. But at the end of the day, it's a question of what the market's going to pay for this thing. Are they going to bid it up like a Salesforce.com and excessive multiple to earnings, if it's earnings you want to base it on? Is it going to be like Apple and be at 12 times earnings? Who knows what the market's going to price this thing at? But from a common sense free cash flow return basis, this price is really, really high.
Michael, I got to give you a chance to respond to that. Your $44 target price, your guess. I mean, how do you come to this target price, given that 85% of Facebook's revenue comes from advertising, the rest from payments, and they haven't been able to diversify beyond that?
And you know, Corey's right. I mean, of course, it's a guess. And, you know, I have payment revenue growing about threefold. I have advertising revenue growing about fourfold. So it's going to take a lot of revenue growth, and that's by 2015. The thing is, I actually think I'm probably conservative. I think that advertising revenue could grow tenfold once Facebook gets serious about advertising. That's the big if, because we don't know when Mark Zuckerberg is going to allow the revenue people to take over, and I don't think they will ever risk diminishing the user experience. So it's the pace at which they're going to grow ad revenue that I think is really the guess. And it's not going to be fast for this year or next year. I think they add about $1 billion of revenue per year for the next couple of years. I really think you're going to see something like $4.8 billion this year, something like $5.8 billion next year. To get to my target, they need to do something like 14 or 15 billion by 2015. So you need a big ramp in 2014 and 15. Corey's right. I'm guessing that they will get enlightened. They will convince advertisers that this data that they're mining is worth a lot, and they're going to get a ton in ad rates because they're able to deliver something that really is wanted by their user and is very targeted, specific to that user.
But I want to bring Paul back in here. Facebook makes 1/10 of Google's revenue, yet has 2 times as many page views. Obviously, most of the revenue comes from advertising. There's been talk of diversifying revenue streams into commerce, into sponsored stories. Can Facebook really do that without hurting the user experience, Paul?
Be hard to get much worse. I mean, you know, you're sitting at abysmal levels in terms of, the overall revenue per user level. So there's an awful lot you can do to simply optimize what they already have, to Michael's point, with respect to doing a better job of targeting ad content to specific content in the Facebook timeline. And that's relatively low-hanging fruit. And then if you start thinking about it, who are the people who have the highest levels of revenue per user? Those aren't the people, in terms of social quasi-networks. It's not people like Facebook or other social networks. It's people like Amazon Amazon who have a transaction component to their business. So once you start imagining overlaying some transactions on top of better targeted display ads, the current revenue per user, and I think this is the bull case here, starts to look like a fairly low hurdle to clear.
Revenue
And
per
Emily,
user, that is the big
right.
question. Michael, I'm going to have to hold it there. But thanks to all of you.